Hello, everybody. Welcome to today's Silver Log. It is the 1st of September 2010, and on the blog at the silverlog.blogspot.com, I put up a monthly candlestick chart as silver gained 7.8% in August, with the majority or pretty much all of the gains coming in the last portion of the month. So I'll put the chart up on the screen, take a quick look at the technicals within this chart. And from its bottom, we have been making a pattern of higher highs and higher lows. And we haven't made a new higher high as of yet, but the probability odds would state that we would. When we first got back to the 19 and change area, it was a previous level of resistance that was encountered in 2008. So the odds would have favored, you know what, we're going to find significant resistance there. We did. We had a successful bullish retracement or correction through price, and it once again has managed to come back to this significant resistance level that we are at right now. And generally speaking, when you have significant resistance, a bullish technical analysis method or way of getting above it is finding the resistance, having a little pullback, and then when you get back to it the second time or the next time or one of the next times, you can then take that level out. And that's what the odds are really showing us, because after its correction through price, it managed to have a run higher and then trending sideways through time. So it's looking as if it wants to burst towards the upside. There was an article which is on the blog from yesterday's post from Bloomberg stating that a lot of options have been placed on gold for the end of the year at $1,500 per ounce. Does that mean that these investors, these traders, these calculated gamblers think it's going to go to 1500? The answer to that is no. They would think around 1600 or more, because if they thought it would go to 1500, they would have bought $1,400 call options. And you can also make a pattern with miniature shoulders, head, an inverted miniature shoulders and head pattern. There's the miniature shoulders that we are taking a look at. Regardless of how you see this, it's a bullish factor to have such a decent size gain and then a consolidation through time. So I'm not saying for sure that it's going to go higher, but what I am saying is that the risk reward odds would state a decent size breakout within this range. So where are we going from a breakout of this range? Well, that answer could be shown on the blog. Well, it's shown on the blog, but the answer is only a potential, because on the right hand side there is a silver price action sentiment. There are 5 different time frames. The super short term, which is roughly around 12 days, has a level from 1775 to 1950, and the breakout on the 161.8 is 2058. The short term, which is pretty much close to the same, that will change within time, but that's just because we were pretty much at the lows just recently and we've managed to get back to the highs. But as far as the intermediate term, going back to the February lows of 1465, the first Fibonacci level was 1634, the second was 1748. Those were successful tests. Therefore, the 161.8 breakout is 2250. And I've also put in the super long term, which has a range of 4 to 50. And I don't think the breakouts really mean too much right now. For one, the breakdown. Don't expect it to break down below 4. And as far as the breakout is concerned, well, we'll wait until we actually get towards that 50 level. But what is significant is this 1905 Fibonacci, because we can see along 1905 it found resistance, and it found resistance again in here. And since it got to this point, it's had that nice time consolidation that a breakout of that Fibonacci level could bring pretty massive gains. We've also had Webbot mentioning how gold and silver is going to be going really, really high, stairs or escalator ride higher. The new poll on the blog. The gold to silver ratio closed at 65 to 1 last Friday. What should the ratio be? Should it be 80 to 1? Should it be 60 to, between 60 and 80, between 40 and 60, between 20 and 40, between 5 and 20, and between 1 and 5, or silver is worth more than gold per ounce? The majority are stating that silver should be worth more in second place, but between 5 and 20 is where most people think. Historically speaking, the gold to silver ratio has been between 15 and 16. I put a small paragraph on the blog. There are a lot of articles today on this page, and I could not put them all on. The mainstream media is saying that silver is going up on economic concerns. They can give whatever reason that they want to, and they most likely will need to come across more stories. Silver is breaking out right now, and the levels in which silver can go towards is almost endless when we price it in fiat currency. Some of the other articles talk about the cup and handle formation. That is very bullish. And I have talked about a long time consolidation that silver has been in. And here we are talking about the 61.8 Fibonacci from the 1980 highs and the 02 lows that I've already talked about. Another video from Silver Futurist, and some articles on the screen. If you know of any videos or articles that should be on here, please send me a message either at my Twitter account or on the YouTube account. So the articles on today from the Associated Press: gold, silver rise as investors seek safer assets. A major breakout in gold and silver mining stocks may be brewing from Daily Markets. Gold, silver rise on safe haven buying from Canoe. That's a Canadian webpage. Special report: how to buy silver, Monday morning. Investing in silver coins, silver future, and silver stocks from Trader Currencies. We have gold and silver outshines the markets in August from Wall Street Grand. Silver up 6% last week. Gold to silver ratio at 65. See value buyers accumulating silver. I missed the R on there. I'll fix that up by the time you go there if you do. That's from Forex Pros. Is JP Morgan closing down its manipulation division for silver? This is from a Godlike Production Forum, which comes from this article here. And on yesterday, there's a video from Mike Maloney, another from Economic Spy. And the article that I was talking about from Bloomberg about the futures at 1500 is this one here: gold rallying to 1500 as sorrow bubbles inflates. I would also like to give a quick reminder that if you want to see quick silver charts from FinViz, click on this one of these links in here. The weekly, daily, hourly, and 5-minute charts are on there. And as far as the 5-day moving average is concerned, we can see it's been correcting through time over the last couple of days. So with that being said, that doesn't mean that it's going to go higher. It just means that it's not as overextended as it was up towards in here, or even this point in here. Watch to see if this level becomes a level of support, but we can see here that it's breaking it. We're at that same key resistance. As far as the cup and handle is concerned, this is the cup, this is the handle, and a very, very bullish breakout that would generally go within it. So thank you for watching this video, and have yourself a magnificent day, everybody. Bye-bye.